Is NIO going to reach $300? Is NIO the next Tesla? Is it too late to buy into NIO stock? Also, could NIO going to crash in the year to come? So in this video, we will try to answer some of those questions, or at least provide you more materials to make up your own mind. Before today's video begins, if you like my content, please consider to like, comment below, and subscribe to my channel. Recently, NIO stock rose to $53 after the Q3 results are released. Both deliveries and profitability figures have been received positively by the investor community, which pushed its stock price to higher levels. So the stock is currently enjoying a fairly long upward trend, and many are wondering if it is too late to purchase the shares. NIO is a Chinese EV manufacturer. It focuses on the domestic EV market in China, with goals to eventually expand overseas in Europe and Americas. Its share enjoyed a very good ride during 2020, mostly thanks to better than expected profitability, delivery figures, and the fact that many investors decided to park their money in EV sector to begin with. The company also focuses on battery as a service to offer to swap out and replace batteries, which is the most expensive component in an electric vehicle. The current areas it focuses on are the manufacturing of vehicles, establishing the concept of battery as a service, and the automation technology by collaborating with other companies. To put things simply, it is a Chinese version of Tesla with a focus on its domestic market and using the batteries as a service rather than an asset within the vehicle. The challenges it faces may come from both NIO, the company itself, and the industry, as well as the economy overall. NIO is currently still in the startup phase and is spending funds to purchase market share and to acquire customer loyalty. In order to do this, NIO requires constant and significant cash injections from either debts or equity financing. The threat to NIO's existence is not necessarily the absence of profitability, but the decrease in source of continual financing. Looking back in the historical data, the one time NIO stock price fell to very low level was because it started to have problems on its cash flows. Looking back in historical data, the one-time NIO stock price fell to very low level was because it started to have problems on its cash flows. The same websites that praise NIO nowadays were wondering if NIO could finish 2017 without going to bankruptcy. It is difficult to imagine nowadays how NIO may have cash flow problems, given that its stock is among the most popular ones in 2020. But the present does not predict the future. There may also be concerns about potential problems from different operations this startup is currently funding. Depending on the nature of those problems, they may be forced to inject a lot of money to resolve those issues, and NIO may be exposed to more problems to come because it now has a growing number of consumers. However, those concerns exist with most other tech companies, and there is no reason to assume that NIO is more exposed than others regarding these matters. Beyond the scope of what a company may encounter as problems, there are also trends of the industry and the global tendencies to consider. As mentioned in my previous videos, the entire EV sector has been riding a gravy train for most of 2020, partially because money managers and institutional traders have been parking their money there. As one of the few sectors actually growing in those difficult financial times, however, as vaccines are being developed, the world economies are expected to gradually go back to how things were before the current sequence of events. The new circumstance will modify investors' behavior, and some of them may consider to divest from EV and put their capital in other sectors that may mechanically grow as societies reopen. Some examples of the alternative investment opportunities include hotels, airlines, travel agencies, and cruising companies. Although not directly related to NIO, this movement of capital described earlier may negatively impact NIO's finances, which in turn may impact the share price. If the financial conditions become deteriorated, NIO may be forced to dilute its shareholders even more to raise money to fund the operations, pushing share price to even lower levels. Another aspect to consider is that so far the attention in the sector have been somewhat monopolized by startups, such as Workhorse, NIO, Tesla, and Nikola. But they are not the only companies manufacturing zero-emission cars. Most major manufacturers have begun increasing their investments and soon their offerings in terms of zero-emission vehicles. Some of those startups managed to collect a lot of money from their IPOs. It is a bit of a stretch to assume, however, that they have more funds than those auto groups that have existed for decades or even centuries to invest in things such as client acquisitions, research and development, factory building, and so on. Of course, I am not saying that the traditional manufacturers are going to crush the startups, but it is fair to assume that in the near future, competition will definitely pick up in the sector and that there will be more hands to share the cake of the EV market. Also, keep in mind that the reason why some EV stocks have risen a lot is because people's assumption is that they will become major players in the future and that they will occupy very important places in not only car industry but also energy storage, while changing people's perception in transporting people and goods from one place to another. This is already reflected in their respective share price, but there may be a different scenario when this future actually plays out. And we cannot always assume that Tesla is going to be as big as people currently think they will. The same goes for NIO, Workhorse, maybe Nikola, although Nikola is another story. There are also considerations that are more geopolitical. So NIO's operations are located in China. Chinese policies regarding electric vehicles, especially subsidies given to zero-emission manufacturers, have a very large impact on the financial performance of the company. In case that the subsidy becomes too costly to bear for the government, it may be decreased or scrapped altogether, which may seriously affect NIO's sales figures. There are also concerns of international relationships between China and other countries, such as US and European nations. It is short-sighted, to say the least, to assume that because Joe Biden is elected as the next president of the United States, the relationships between the two countries will automatically improve, since they began to deteriorate under Barack Obama. Given that NIO's capital market is located in the United States, but its operation centers are located in China, regulations may be an issue if diplomatic relationships become under stress, like they were for TikTok. This potential problem may become especially acute if NIO eventually expands overseas, in regions where the US dollar has jurisdiction, or at least has influence over decisions of local institutions such as banks and insurance companies. Regarding the trading approach, NIO stock has been enjoying a very bullish ride in 2020, and it is expected that this trend will not be broken in the near future. However, as the economies reopen around the world and the focus of investors possibly shifting away, it is possible that the price will be traced back to previous support levels, which in our case may be much lower than its current price. This is to be expected and presents a good opportunity for investors to buy on the dip. From where things stand now, NIO is a robust company and does have more growth potential, regardless of 2020 hype around EV stocks. My advice would be to have an initial but tiny exposure to NIO stock if you haven't had the chance to purchase it, and to gradually acquire more NIO shares as dips present themselves in time. The best timing may be when capital starts to drift out of the EV sector to increase your holdings. The recommended exposure for this stock is between 3 to 5% of the portfolio. Thank you very much for watching. If you like my content, please like, comment below, and subscribe.